Hi, happy Ganesh Chaturthi to all of you. On this auspicious occasion, I would like to record a video regarding USDINR in comparison to your equity trading. So you will find that many people are trading in equity market, but they don't prefer the currency market, feeling that the equity market is more beneficial than the currency market. But what I have seen is that currency market is more productive, and you get good results if you have a definite idea regarding the movement of that particular stock. So here I am going to compare USDINR with your normal equity trading. Now this is an USDINR monthly chart, and if you can see here, we are using the trend candle to identify the trend of the market in a bigger time frame. So you can see that the overall indication of the market is bullish. There will be instances when the market will come down, but there is always an opportunity to enter the market when the market is coming down. And whenever there is a pullback, you can book your profits. So we should always focus on buying USD INR futures whenever the market tanks. And gradually when it rebounces, you have to start booking your profits. You can do multiple trades in USD INR. You can trade futures, you can do straddles, big straddles, small straddles, or you can do normal. In case of trading futures, you can do only straddles with small quantity and good decent profits. So in this video, I will like to explain the things that I have seen so that you can also go through this and decide for yourself if USDINR trading is good for you. So even if you change this monthly time frame to a daily time frame, you can see that it's always bullish. All the drops are good or are a good thing for buying. So whenever the USDINR starts tanking, you start accumulating, and whenever it rebounds, you book your profits. So futures is used only for buying USDINR. Now the benefit that I would like to show is that whenever I trade currencies, I need a max to max margin of 1800 rupees only. So what is that? I can plan multiple trades with my small capital. So if you see here, I kept a buy set of 50 paisa and a target of 1 rupee 50 paisa for currency futures. Now the starting price should be decided as per one's own capital. So if he is not comfortable with these higher prices, he can keep a lower price and start accumulating when the market starts falling. And the set off also can be changed from 50 paise to 60 paisa, 70 paisa or 1 rupee as per one's capital. Here I have selected as a 50 paisa as a mean average capital of an individual, wherein even if he buys 15 lots starting from 79.50 to 72.50, that is a gap of 7 rupees, his margin would be approximately 30,000 rupees and his M2M would be 49,500. So the total investment would be 80k. Now, when he keeps a target of 1 rupee 50 paisa for each trade, he would get a profit of 1500 rupees. And assuming that he makes only 12 profitable trades in a year, his return would be 18,060. Now, the benefit of buying it at gradual lower level is that even if the market remains range bound on over a period of time, you may get multiple profits in the same range. So that number of 12 trades will be that these 12 trades I am expecting in 1 year and not in 1 month or 2 months or 5 months. I am expecting this 12 minimum trades in 1 year. So if the number of trade increases, my profitability will automatically increase. And if the price does not fall to this level, I may not be requiring this much capital, but since I am planning to take a trade, I will be considering this as the capital is as 80,000. So even if I get 18,000 rupees profit in a year, my return on investment would be 22.72%. Now suppose I take the same trade in equity. So if I want to invest 80,000 rupees in an equity and the scrip price is 1000, then the number of shares that I can buy is only 80. Here, even if the market, if I expect a 22% return, then the market has to move to 97,600. That means the exit price would be 1220. That means it has to move 22% on the higher side. And here, since I'm investing all my capital in one go, I cannot do the averaging. So that is why we are saying that if a person buys with 80,000, if he needs to average, if the market tanks, he will need another capital. So, and if he does equity averaging in this format, his average will not come down as expected, because you are paying here all the 80,000 rupees in one go, and here you are paying only 1800 rupees for one lot. So even if the market falls down, your total investment for 15 lots will never exceed 80k. You cannot expect the market to fall to 72 in 1 year, but we are expecting the worst and making a plan that the market will tank 7 rupees in a year. Now let us see the merits and demerits of equity and currency trading. The main merits of equity trading is that we will get dividend and bonus shares if announced by the company. But the bonus shares are very rare, but yeah, definitely you will get good dividends from the company that you have invested. The demerits are that capital required is 100% in case of equity buying, and more capital will be required if the scrip falls for averaging. And the scrip has the potential to either go to zero or to a higher price. We cannot say that the scrip will not go to zero. If there is any problem with the company, the management of the company, or any issues with the company, then the scrip has every potential to go to zero. And if the scrip falls to cross over our buying price, then we won't get any return. Here the waiting period may increase and our return would decrease. And if we want to if you want to trade in equity, we will have to track many stocks to get good returns. So we will have to track the stocks on a daily time frame to see which stocks are coming into buying and which stocks are going to a higher level for profit booking. Whereas if you're trading in currency, the demerit is that problem is there only if there is a very big fall due to a major problem worldwide, just like Corona or Lehman Brothers. If there is such issue, there could be some fall in the currency price, but then it will recover. And there are no chances of any dividends or bonus share. And the merits are, it requires a very low margin, that is 2.5% of the whole trade value of the USDINR is required for trading USD. We can average the buying price, and if the market falls and goes above to the first entry price, we can book profits in the lower broad contracts, and currency will never become zero. And we don't need any additional capital if we trade as we are planning. If I'm planning 15 trades, I should stick to my levels, and I should only enter when the price reaches that level. And we will not be utilizing the full capital, but we will get the returns on the full capital due to multiple swings between the range of the currency. And here we have to focus only on one stock, that is USDINR. Now, let us consider the historical data to analyze what is the high, open and low in value terms and in percentage terms, and understand what is the general swing of the market. Now, if you see here, I have taken a data from 1/9/2009 to 18/8/2022. I have considered the open, high, low, and close price of all the year wise, and then I have calculated open minus low in rupee terms and in percentage terms, high minus open in rupee terms and in percentages, the difference between the high and low, and the difference between the close and the opening, and the difference in percentage terms of close minus open terms. So if you see here, the basic average fall is approximately 3.34%, and the average gain is 8.95%. Now, when we have seen the chart also, we have seen that every fall should be considered for buying. So this clearly proves that whenever the market tanks, you should start buying. Don't buy initially, but after a certain fall, you can start accumulating, because here you can expect a maximum fall of 3 to 4% and a gain of 8 to 9%. So depending upon this, your risk parameter and your comfort zone, you can decide the difference between two buying prices and the target price. Now, why we are saying that we should always buy this? Because the chart clearly indicates it. Buy on dips. If you see, every fall has given a new high. Every fall has given a new high. So you should always focus on only buying and not selling. And when you are buying, you should always focus on the far month contract. There are three contracts that are available to you at present. The three contracts are September expiry, October expiry, and November expiry. Now I would generally prefer the November expiry for buying, since I don't need to do the rollovers, and since my target is 1.5%, 1.5 rupees, I need time for the market to move by 1.5 rupees. So that is the reason why I'm selecting the November expiry, and the moment the September expires on say 29 on the September expiry will be on 30th, on 28th. So when on 28th September 2022, I will stop buying November contract, and then I will shift to December expiry. So once month is completed, you shift to the next expiry. And if anyone has a huge quantity of buying, then instead of profit booking, he can sell the current expiry and get some profit when the market is falling. That is all up to one's own requirement. I would not give you a judgment of how to trade in that particular way. It is all depending upon one's own ability to trade here. Now, let us use the power of compounding to generate capital over a period of years. Now, suppose I have only a capital of 10,000 rupees. So I can trade in this instrument using your straddles, one lot of straddle. So what I would do is that I would look at the market, and whenever it is at the round number, I will sell a call and put, and then I will wait for my 5% erosion. Whenever I get 5%, I will exit from the trade. Every month I will trade in that same method to earn 500 rupees per month. So even if I get 500 rupees a month, 12 months I am getting 6,000 rupees, and at the end of the year I will be having 16k in my hand. Gradually, as my capital increases, I will increase my lot size. So I will increase my lot size only whenever I get a profit of 10k plus. So here you can see that in the first year the investment was 1k, 10k. I got a reward of 6k, so my investment is 16k. Here I will not increase my lot. I will keep the lot size as only 1. Whenever the investment goes to above 20k, I will increase my lot. Whenever it goes above 30, I will increase it to 3 quantity. When it goes to 5k, I will increase to 5 quantity. So if you see that even with a small capital, as the year goes on, my number of lot keeps on increasing, because the return that I'm going to get is 5%. And since you are starting with a small capital, you won't be afraid in the start. So you can get a very good idea that the system is working, so that you won't have any fear when you want to increase your lot size. Now the second option is that you get the same profit, but you try to add a SIP amount also to the trade, so that when I'm earning 6,000 rupees, I'm adding 6,000 more. So from second year only, I'm increasing my lot size. If you do it in this way, what is happening is that your investment will grow faster, and instead of 891, now you would be trading with 2271, 2 to 7 lots at the end of year 16. And if you see the return per year, it's a very substantial amount. And since you're starting with a small capital, and since the years go by, your confidence will increase and you will not be fearful of trading this much lot, because your initial investment was only 10K. Now here I have taken the third option, wherein I am increasing the SIP amount by 500 rupees every year. That means if I am investing 500 rupees for the first year, second year I would increase the SIP to 1000, the third year to 1500, fourth year 2000, and so on. So if you see here, when I am increasing my SIP amount, my total number of lots automatically increases, and so does my capital. So with a very small capital, you can start with USDINR and then gradually move to a higher levels. So this will help you to gain confidence and then trade with a huge quantity, because by the time you come to this level, you are already 6 years into that particular strategy and you are very confident of the strategy, so you will not be fearful. So with a small capital also, you can start investing, and at the end of 16 years you can plan your retirement. If you're already at a above age, then you can go for a huge initial investment, increasing of the initial investment, so that the number of years required for getting this result would be reduced. I hope you will have a look at this video and understand it properly before starting your investment. I would like to say that I am not a SEBI registered analyst and I am only explaining my knowledge to you. You go through this Excel, and then if you are satisfied, you can start trading using this strategy. I hope you will make use of this Excel and this YouTube video and start trading in USDINR instead of equity to get maximum returns. Thank you for watching.